Alright, so welcome to the 2.0 version of the candlesticks and chart patterns video. I promise you guys you're going to love this one. I did add and remove some unnecessary and necessary stuff in here, but don't worry, the content only got better. So without wasting any more time, let's begin. Alright, so keep in mind, while candlestick and chart patterns can provide valuable insights into market sentiment, potential price entries and reversals, but relying solely on them when trading may not be a sound strategy. If you want to learn more on how to trade with chart patterns, then I would suggest looking at my Elliott Wave series, or you can head over to Tori Trades channel. Now for my Elliott Wave series, guys, I highly suggest you watch it, especially if you do want to trade with something like chart patterns, but with Elliott Wave it is a little more technical, so definitely check that out. And if you want to learn how to trade with chart patterns the more traditional way, then definitely check out Tori Trades channel. She's really good at what she does. I highly recommend her if you want to trade with chart patterns. Now another thing too, guys, please, if you are planning on buying some kind of candlestick or chart patterns course from some kind of dude that swears that by using these 5 candlestick chart patterns you'll be profitable, or these 10 chart patterns made me a 100k, I don't know, some craziness, please don't buy them. They are not worth it. I'm telling you, do not buy any of those courses. I have first-hand experience in this. It is literally not worth the money. So if you are someone that's new and just starting to watch these kinds of videos, please refrain from buying those courses. They are not worth the money. And the more experience you have in trading and in watching my content, you'll realize that it really isn't worth it. Okay, so with that being said, let's move on. Okay, so which is better? Candlestick patterns focus on the relationship between open, high, low, and close prices in a specific time period, providing insights into market sentiment and potential reversals. Chart patterns can be geometric shapes that form on price charts over any period of time, indicating collective market behavior. Now, using both candlestick patterns and chart patterns can give confidence in trading setups, but they need to be combined with other technical analysis tools and risk management strategies derived from price action, SMC, ICT, and if possible, all of the above. So if you guys are planning on trading anything with candlestick patterns or chart patterns, please add some kind of smart money concepts or ICT concepts into this, or really just stick with SMC or ICT. You're way better off just learning that. You don't want to waste your time learning some kind of special chart pattern or some kind of special candlestick pattern. You know, I'm not saying you can't make a strategy or a profitable strategy off of candlesticks and chart patterns, but it's not optimal. I really don't suggest it. You'll probably spend a lot more time wasted in figuring out what chart patterns work, what don't, what candlestick patterns work and don't. Please just stick to SMC or ICT. You'll have a way better chance of making a profitable strategy off of that. Okay? Alright, so in this portion I'm going to be talking about my favorite candlestick patterns. These patterns specifically, when it comes to candlesticks, I typically like to use them only for entry confirmations. Nothing else. I don't trade off of these candlesticks alone. I never do. So please back test them. Don't just take my word for it. Actually put the chart time needed to figure out if this is going to work best for you. All right. Okay, so I call these the Fantastic Four. Now, real quick, let's just go over the anatomy of the candles. Okay, so for a bearish candle, the wick here, the top end of the wick, is the high of the candle for a bearish candle. Now it's also known as the high of the range. Now if you want to trade, or not trade, but understand this in a deeper concept, you might want to look at my AMD/Power 3 video. You'll have a lot more in-depth knowledge on what I mean by range. Okay, so definitely check that video out once you get more comfortable with price action terms or a lot of the technical stuff that I talk about in all my videos. All right, next is the opening price. So for a bearish candle, the opening price is this part of the body. Okay, that right here. And then obviously the body of the candle, right? Then close of the candle. So this is price closing at the bottom here of this candle, and it's also known as the close range. And then lowest of price slash low of the range. So this is the portion or the lowest part that the range has came down to. So just a real quick insight, what I mean by range is price at some point on a lower time frame came down here and started ranging, okay, during this wick. All right, and then this is the lowest point that price has reached, and then finally came back up and ended up closing here. Now for a bullish candle, you have the high of the candle range. So this is obviously the highest point that price has been able to reach on a bullish candle, and then here is where price ended up closing, or this is where the range ended up closing at. Now obviously we have the body of the candle, then we have opening price, so this part of the candle is where price opened, and here is the lowest point that price has ever reached on a bullish candle. All right, now when it comes to the engulfing candlestick, hammer, doji, or 3 inside patterns, you can apply these on any time frame for any strategy that you want. Just make sure you're only using them as entry confirmations, nothing else. Okay, don't trade off of these candlesticks alone. And yes, they do work vice versa. So in other words, instead of waiting, if you're like in a downtrend and you're trying to look for confirmation to go short, then you can just wait for a bearish engulfing candlestick pattern. All right, so we're keeping it very simple here, y'all. Now, if you have any questions on this, please leave them down in the comments below or join the Discord and ask me questions through there. All right, let's move on. Okay, so here is a quick example on how I would use the candlesticks as an entry confirmation. So real quick, candlestick length. The length of a candlestick is determined by the difference between the highest and lowest prices during the specified time period. Longer candlesticks indicate greater price movement, while shorter ones suggest weaker market conditions. P.S. When it comes to the engulfing candlestick pattern, the smaller the wick of the engulfing candle from both ends, the higher the probability it becomes. So real quick, as you can see, we're in an uptrend, right? We have a break of structure to the upside. We have liquidity that was getting swept. Finally, price came down, swept this last bit of liquidity, tapped into a fair value gap. And what we were waiting for is a fairly decent engulfing candle, and we got it right here, as you can see. Okay, once we see this engulfing candle, we can enter, or if you see any of the other previous candles that I spoke about, you can use it and enter off of there. You could have entered off of this one, maybe even this one, or just simply this one right here, right? And then you could have targeted the first set of liquidity nearest to you, which would have been here, right? Pretty easy, pretty simple. All right, keep it simple, y'all. Do not make it more confusing than what it needs to be. Okay, now let's move on. All right, so now we're going to talk about my favorite chart patterns. Now when I say favorite, I don't mean favorite in the sense that I use them all the time and I trade with these patterns all the time, because I really don't. I mean favorite in the sense that I think if I were to trade off of chart patterns alone, these would be my favorite to trade off of. Okay, so hopefully that clears that part up. Let's begin. All right, so real quick, if you want to skip this part of the video, you can, but I really highly recommend you check this out. This is all just my personal opinion off of my experience. You don't have to take my word for it completely. You can take it with a grain of salt, right? If you have a different experience, that's okay too. You know, let me know in the comments down below if you agree or disagree. All right, so in general, reversal patterns are best suited for longer time frames, while continuation patterns are best suited for shorter time frames. For example, a head and shoulders pattern is a reversal pattern that is typically found on daily or weekly charts. On the other hand, a triangle pattern is a continuation pattern that is best suited for intraday charts. The type of asset being traded also plays a role in determining the best time frame for chart patterns. For example, stocks tend to move more slowly than currencies, so chart patterns on stocks may need to be identified on longer time frames. In general, the following time frames are good for trading chart patterns, in my opinion. So for daily charts are a good time frame for trading reversal patterns. They provide enough data to identify the trend and the potential reversal points. Weekly charts are a good time frame for trading continuation patterns. They provide enough data to identify the trend and the potential continuation points. You can also trade continuation patterns on the daily time frame. as well as reversals on the weekly, and 4-hour charts. So 4-hour charts are also a good time frame for trading both reversal and continuation. I would highly recommend that you stick to the higher time frames though, specifically more on the weekly if you are trading chart patterns. I personally use chart patterns, if I do, as more for finding my bias, but I'll get into that a little later. 1-hour charts. So 1-hour charts are also a good time frame for short-term continuation patterns. They provide enough data to identify the trend and potential entry and exit points. So short term, guys, do not hold your trades for too long when trading on the 1-hour. If you want to learn more on how to trade with chart patterns on like 1-hour or 4-hour time frames, things like that, Tori Trades channel is the best. All right, she'll probably disagree with everything I just said, but that's okay. I'm not a really big chart pattern trader as it is anyways, at least not anymore. It is more important to note that the time frames listed above are just general guidelines. The best time frame for trading chart patterns will vary depending on the individual trader's style and preferences. As for the type of pairs, chart patterns can be traded with any asset pair. However, some pairs are more conducive to chart pattern trading than others. So for some pairs, certain chart patterns might work best. For some other pairs or assets, maybe chart patterns won't be respected at all, or they won't show up either. Who knows? Here are some examples of pairs are well suited for chart pattern trading. Euro USD, it's pretty good. I would say I've seen a lot of people trade Euro USD with it. GBP USD as well, and USD JPY. All right. Now, as for indices, I don't know. I don't really think indices work best with chart patterns, but I could be wrong. Now, ultimately, the best way to determine anything is to experiment and find what works best for you. So if you do want to trade with chart patterns only, please backtest. At least 300 trades, man, because chart patterns, that is a little difficult to master. At least for me it was. But like I said, I don't trade that, at least not anymore. It just didn't work best for me. All right, but who knows? It might work well for you guys. Let me know down in the comments below. Okay, so here is a chart patterns cheat sheet that you guys can use. If you want, try seeing if you can find these on like a chart, experiment with them, see what you can do with them. But like I said, guys, don't get too hung up on just trading chart patterns alone. If you really want to learn how to trade chart patterns the best and technical way, definitely look at my Elliot Wave series. I promise you, you're gonna love it. And I may or may not explain the chart patterns as you see them here a little differently from what Elliot Wave teaches us. So if you see that something doesn't really align with this cheat sheet or the way that this current video is showing it to you, it's probably for a good reason, okay? Because with Elliot Wave, it's a little different. All right, it's a little different. So let's move on. All right, so I got this from one of my videos that I made. I'll link it in the description below. It's for finding your weekly and daily bias, all the technical stuff you need to make it, okay? So on there, I said, yes, you can use chart patterns if done correctly. I only recommend you use them as an area of strong support and resistance, and if possible, combine them with some form of ICT or SMC. Both is optimal. Now, if you want, look at that video. It'll explain this part in depth, but typically I would use a chart pattern as my area of support and resistance. So this would be my support, and up here would be my resistance. And typically, if price is up here in this area, right near the line, I would look for some kind of confirmation that says, hey, we're ready to go down. Start looking for shorts for the rest of the week. All right, something like that. All right, now if you are someone that wants to use it as part of a trading strategy, you can use chart patterns to trade breakouts. So some people trade breakouts on the lower time frame in continuation of the trend, or according to their daily/session bias. But you can trade whatever you want on any time frame. Just make sure you properly test your strategy using my 300 trades rule. So at least take 300 trades. All right. So in this example, you can see we have a breakup structure towards the upside. We see our chart pattern form. We see some candlestick confirmations here. It's breaking out of the pattern. So what you do, enter off of that candlestick here, stop loss underneath this little order block. And as you can see, we hit TP. This was like a fixed R. I think it was like a 1 to 5 or something like that. And bam, real quick. I've seen people trade with chart patterns on the seconds time frame, like a 5 second. I've seen people use the 1 minute, right? It's up to you. if I was you, just backtest this, okay? Don't just take my word for it. Please actually backtest. Alright, so you made it to the end of the video. It wasn't too long, I hope. At least it wasn't for me. Definitely join the Discord, guys. You can ask me questions there. You can reach out to me there. Follow me on IG, Twitter. Send me an email if you got to, you know, whatever the case. Alright, and before I go, I want to leave you with some biblical wisdom, as always. So this is from Romans 12:2. Do not conform to the pattern, see what I did there? To the pattern of this world, but be transformed by the renewing of your mind. Then you will be able to test and approve what God's will is, his good, pleasing, and perfect will. So, with that being said, guys, that's all I have for you. Please backtest. Please join the Discord. Ask me any questions that you might have, and I will definitely do my best to get back with you. I'll see you guys in the next one. Peace.